If your business received a CP504 notice, you're not in trouble yet, but you're on the clock. CP504 doesn't mean the IRS is taking action today. It means they're positioning themselves so that they can. And for a business, that distinction matters, because what you do at this stage determines whether enforcement stays theoretical or becomes operational. In this video, I'll break down what CP504 really means for a business, what changes inside the IRS once it's issued, and why waiting here quietly costs you leverage later. What CP504 actually is and isn't. CP504 is a statutory notice of intent to levy. That means it exists because the law requires the IRS to send it before certain enforcement actions are allowed to happen. This isn't a courtesy letter, it isn't a reminder, and it isn't the IRS asking you nicely to resolve the issue. It's part of a legally required sequence the IRS has to follow before it can escalate collections. Typically, CP504 arrives after multiple debt balance due notices have already gone unanswered. By the time this letter shows up, the IRS has already concluded that prior attempts to resolve the issue voluntarily didn't work. Another detail that confuses a lot of business owners is CP504 usually references only one tax year, even if you owe for multiple tax years. That doesn't mean the IRS forgot about the other years. It doesn't mean those balances don't exist. It simply means the IRS is advancing enforcement 1 year at a time. This is also not the final notice before all enforcement. There's usually another notice that follows, often sent by certified mail, that carries additional procedural rights. But CP504 still matters because it changes how the IRS internally classifies your account. Once a CP504 is issued, the IRS is no longer in a passive posture. It's actively preparing for enforcement, even if nothing happens immediately. And that's why I frame it this way. CP504 isn't enforcement, it's the IRS getting legally ready for it. Now let's talk about why CP504 hits businesses differently than individuals. From the IRS's perspective, businesses are easier enforcement targets. Not because business owners are worse people, not because businesses deserve harsher treatment, but because businesses have infrastructure. Businesses have bank accounts, payroll systems, merchant processors, and accounts receivable. Those things are leverage points. When the IRS looks at a business account, it doesn't see a person struggling to get by. It sees cash flow. It sees ongoing income. And it sees multiple ways to apply pressure without going to court. For individuals, enforcement often means wage garnishment or bank levies. Serious, but slow or sometimes limited. For business enforcement, this can be immediate and disruptive. The IRS prioritizes business bank accounts, incoming payments, payroll streams. Why? Because those actions create fast leverage. The IRS doesn't need to argue, it doesn't need to prove intent, it doesn't need to convince a judge, it just needs access. And that leads to an uncomfortable truth that business owners need to understand. The IRS doesn't need to win an argument to cripple a business, it just needs access. That's why CP504 should never be viewed casually in a business context. What changes inside the IRS after CP504 is issued? One of the most misunderstood parts of CP504 is what happens inside the IRS after it's issued. From the outside, it may look like nothing has changed. You get the letter, no one calls you, no money is taken, life goes on. But internally, several things shift. First, your account moves closer to enforced collections in the IRS's system. That doesn't mean enforcement happens immediately, but it means your case now qualifies for escalation. Second, levy pathways begin to be identified. The IRS starts looking at where it could collect from if it needs to, not necessarily where it will, but where it can. Third, case flexibility quietly decreases. Early stage collection cases allow more discretion as notices stack up and discretion narrows. Fourth, silence is interpreted in a very specific way, not as they're busy, not as they're figuring things out, but as non-cooperation. This is critical to understand. The IRS doesn't punish you for being overwhelmed, but it also doesn't pause the process because you're undecided. That's why I tell clients nothing may happen immediately, but leverage starts expiring. You don't lose leverage all at once, you lose it incrementally, quietly, procedurally. The most common business owner mistakes at this stage. This is where things usually go wrong. The most common mistake is treating CP504 like another routine bill. Business owners see a dollar amount, assume it's negotiable later, and put it on the mental shelf with other obligations. That's understandable, but it's dangerous. Another mistake is assuming that no action means no risk. Just because the IRS hasn't levied yet doesn't mean it won't. CP504 is not about immediate action, it's about readiness. A third mistake is calling the IRS without a defined strategy. And I see this all the time. Business owners pick up the phone hoping for clarity, but without knowing what stage they're in or what options preserve leverage. That often accelerates enforcement rather than slowing it down. Another common error is viewing the issue as personal instead of operational. CP504 is not about your feelings or intentions. It's about the IRS's collection process and how your business fits into it. And finally, many owners wait until cash flow is already interrupted before taking the issue seriously. By then, choices are reactive instead of strategic. And that's why I draw this distinction. Most damage doesn't happen before CP504, it happens after it's ignored. Timing matters more than payment right now. Here's something that surprises a lot of business owners. CP504 is dangerous because of timing, not tone. The letter itself may sound generic, it may not feel urgent, but it exists to move the IRS closer to enforcement authority. At this stage, paying immediately is not always the best move. That doesn't mean don't pay. It means don't rush blindly. Sometimes paying too quickly waives procedural rights, locks in penalties, and eliminates negotiation leverage. Acting early preserves options. Acting late forces compliance. This stage is not about resolution, it's about positioning. You're deciding whether to remain ahead of the process or get pulled behind it. That's why this framing matters. CP504 isn't the crisis, it's the last moment to stay ahead of one. Where legal strategy actually comes in, and this is where I need to be very clear, CP504 is not a bookkeeping issue, it's not a filing issue, and it's not about whether your CPA did anything wrong. This is a collection strategy issue. Decisions made at this stage affect cash flow, business operations, and exposure to future enforcement. This is where advocacy matters more than math. CPAs are excellent at compliance. They're not trained to manage enforcement leverage. Attorneys focus on process, timing, risk containment. And that difference matters when the IRS is preparing to act. If your business received a CP504 and you're not sure what stage you're actually in, that's not something you guess on. We offer a free call to assess whether your business still has leverage or if enforcement is already forming. You can book that using the link below. Why waiting makes this worse, not better. Business owners delay for understandable reasons. They tell themselves nothing has happened yet. My CPA said it was fine, I'll deal with it later. But the IRS doesn't reward intent. It rewards compliance or enforces non-compliance. Once enforcement begins, options shrink, costs rise, timelines compress. Fixing things after disruption is slower, more expensive, and more stressful than handling them early. That's why this line matters. Waiting doesn't preserve options, it quietly removes them. CP504 is serious because of where it sits in the process, not because of how it sounds. By the time this notice shows up, the IRS has already moved past reminders and into positioning. But here's what catches a lot of business owners off guard, even when people act on time. They often respond the wrong way and give up leverage they didn't realize they had. Not every IRS letter means enforcement is coming, but every IRS letter is a decision point. In the next video, I'll walk through what IRS letters and notices actually mean, the most common mistakes people make right after receiving one, and how to respond in a way that keeps a manageable issue from escalating into audits or collections. That's the next thing you should watch.